Carrie D. I can.
Hi everyone, welcome to the Timing Research Show for March 21st, 2016. Today we will be talking about the 130th weekly report from Timing Research. If you have not had a chance to take a look at this yet, just go to TimingResearch.com/reports and you can download that, this or any past report there. My name is David Kosmeter. I'm the creator of Timing Research, and I have Neil Batho here to host this week, so I'm going to go ahead and turn it over to him.
All right, thanks a lot, David, and thanks for starting this show. It's been a great 2 years, and we got 3 guests today on the show, and myself. We've got Eric.
How you doing?
Test.
Is my audio not coming through?
I cannot hear anything. I don't know if I'm supposed to. I can hear stuff.
No one's getting any audio?
I'm getting audio.
I got it.
Yeah, sounds good.
Is the audio coming through?
Yes.
Is the audio coming through, or is it not?
Yeah, I can hear you fine. Yeah.
I can hear you.
Yes, I can hear you. Okay.
Yeah, you can. Neil, can you hear us? Neil? Okay. Yeah, I guess Neil's having some audio problems, so let's go ahead and Andrew, let's start with you if you want to tell everyone a little bit about yourself and your site.
Yeah, sorry, my name is Andrew Keene. I've been trading professionally for about 14 years now. My website is www.alphashark.com, and we educate traders how to trade properly and better. I'm not a registered investment advisor, so I'm just trading on my own account, and I trade predominantly equity options. We run a full all-day trading room. Trading room's open for about 8 hours a day. We have 6 moderators on throughout the course of the day to help teach, guide, and educate traders proper reward risk setups while trading in front of our subscribers with real money.
Okay, great. Thanks. Neil, can you hear us now?
I can hear you guys. Am I coming through okay?
Yes.
Yeah, sounds good.
Okay, I just logged back in, so it's working now. I run TraderReview.net, and we use mostly technical analysis as well as a little bit of crowd sentiment, and I use some very interesting indicators in point and figure, which I learned when I was a broker way back in 1998, 1999, when tech was booming, and I did a webinar, not a webinar, an actual seminar, when people used to do seminars. The internet had just got invented a couple years before, so we did a seminar on point and figure charting, and some really amazing stuff, and I got back into it when I started doing my service, and then I started using the Ichimoku well, and I put it all together and send out alerts to clients on stocks and options. I'm not sure. I'm moderating the show, so I'm not sure who spoke already. I think it was Andrew. Maybe we can go on to Eric. Eric, can you tell us a little bit about yourself and your service?
Yeah, my name's Eric Wilkinson. I've worked on the floor for about 20 years. Started trading in college, but then moved to Chicago to start trading. Now with ProTraderStrategies.com, where we do education on options, everything from call strategies to more geared towards the advanced trader, like we're going to be doing one this week on straddle with no risk to the upside. So we're going to be making it IRA acceptable, things of that nature. So we are also doing education for the newer trader, and we do daily market commentaries where I talk about trades that I'm doing, what I see in the markets, and where I'm going to be putting on trades and where I'm taking them off. So you can follow us at ProTraderStrategies.com or on Twitter at Wolfman's blog.
Okay, Wolfman's blog, great. Thanks, Eric. And we also have Jim. Oh yeah, Eric, if you could talk a little bit more about that IRA compatible later in the show, that would be great.
Okay.
I think there's a lot of investors out there that want to know about how they can do some very interesting strategies in their IRAs besides, just buying and selling. We've got the ETFs now, which is fantastic. But if you could go into that a little bit later in the show, that'd be great. We've got Jim Kenney from Option Professor. Jim, if you could tell us a little bit about yourself and Option Professor.
Sure. As far as myself is concerned, I provide the content over at the Option Professor. They have 7 option learning DVDs. So basically it's an education firm strictly looking at the strategies, and so that people have a working knowledge of the strategies, the use and the risk of each strategy. It could be for income producing purposes such as covered call writing, or it could be different strategies such as hedging, where people are trying to protect their positions from drops by using calls and puts in a collar fashion or something like that. But there's excuse me, about 5.5 hours of material there that are very, very informative for people, particularly people who are starting out or have moderate information. And it gives another angle on how the options can be used and what they do.
Okay, great. Thanks a lot, Jim. I'm going to go right on to the questions now, and people sign up for this program so that they want to know what's going to happen in the markets this week. So we're going to tell them. And we're going to go right on to question number 2 from the PDF that got sent out. Based on any technical or fundamental indicators you want to use, would you predict the S&P 500 will move higher or lower from Monday's open to Friday's close, as well as your confidence? And we'll go on to Eric. What do you think, Eric?
I'm still bearish. I don't think the overall economy is doing that well. I don't use a lot of technical indicators other than I look at support resistance areas that I've seen the market either react to or defend. So that's why I came out with the 2075 area that would continue the lower highs and keep that bearish trend intact. I would have to say I'm about a 50 delta on us being lower. I think that this rally back after the lows we've seen to 1802, I think that that's been a bit of a relief rally, and it should have another pullback coming. But the last couple of times I've talked to you guys on here, it didn't work out. So I was thinking about making a joke and saying thought it was going to be higher today, so that it would actually come to fruition that we'd see a sell-off. But I'm bearish still, so I'd have to give it about a 60 delta.
Can you explain a little bit about delta to our readers?
Well, the deltas on options is really the probabilities. So the probability of this being down, I'm about a 60 delta, which would be about 60% probability of us being down at the end of the week. Does that make sense?
Okay. Yeah, it does. Okay, Andrew, what is your take on the week?
Yeah, I totally agree with Eric. One thing I look at is an RSI, which is Relative Strength Index, and if we look at the S&Ps on the daily chart, we are completely overbought here. We're approaching that 70 level. Just traditional RSI, you can pull up on any online broker platform. If you hit 30, you're oversold. If you hit 70, you're overbought. We could continue overbought for a while, and we could get this run up until the end of the quarter. I'm quite amazed of how strong this market has been. Another thing I look at is the volatility index known as the VIX. We see the VIX spot getting close to about 14. So I personally am short. I'm short through some of the oil names, which are working a little bit better today. But I think this market heads lower into the end of the quarter. I think everybody thinks they're going to run higher, so they're going to reverse and run lower. I would give it about a 58% chance or 58 delta. I don't have as much conviction as Eric, but I do think we head lower.
How much lower? I want to go into this because it feels to me, I know it's not my turn, just feels like it might be a little bit lower. we're not talking like full on everything's about to crash type lower. And maybe Eric, if you could just go in on a bit of that too, and then we're going to get to Jim. How much lower?
Yeah, I don't know that we're going to go down and see the 1802s. It's really going to be data dependent. One thing that I'm looking at right now is are the data points coming out. One shocking data point that came out was the Philly Fed. Now, I don't think that everybody really looks at that a whole lot, but it was surprising that the Philly Fed Manufacturing Index came in at 12. I think they were expecting like a negative number on that. So that was a pretty big shocker. And so I'm going to be really data dependent. I don't think we have any really great data points coming out this week, but going forward, I just don't see the housing market really turning around. I was thinking that with the 25 basis point move up that the Fed did, that it was going to get some people off the porch and get out there shopping for new homes, and even the new homes number that we had out today wasn't even that great. So I am still bearish the overall economy. I don't think the Fed is going to raise rates anytime soon until the overall global economy starts turning around. So I do see a pullback here. I would see it finding support around 1947 in the S&Ps. That's just kind of the value area low. If you look at a Stoudemire, I know you look at point and figures, but Stoudemire or the volume node down there is right around 1947. So I would see that as being one of the first major support areas for this market. I'm going to try and see if I can share my screen and show you what I'm talking about here. Can you guys all see that now? So this is what I'm talking about with the volume profile. So as you can see, the overall market right here, this is the point of control. That's where the overall market sees value. When we had this type of structure happening, that was creating a lot of overhead supply, and that's what really creates this downdraft. Now, the bulls are really trying to push it up back into this area, but I think that it's going to top out here and want to test this value area low, which is right there at around 1947.
Okay. Thanks, Eric. Andrew, how much down we're looking this week?
Yeah, I totally agree. I don't think there's going to be a big downtrend this week. I just think that we could sell off maybe to where we saw resistance of maybe like 2005 level in the S&P 500 futures. I think we're going to come to another bear turn in the market. We haven't tested the opening of the year, which is 2059, so we are still down on the year. I don't know if we get up there. So I would think we go down, somewhere between 25 and 30 points between now and the end of the week. But as election time comes around, and whoever is going to be, in the presidency, I think there's going to be a big turmoil, and people are going to question whoever is president. I'm not taking any sides here about in the presidency and how that's going to affect the market. So, by the end of the week, down, not considerably, but I think by the end of the year we take out that 1802 level.
Oh, you think there's going to be a big sell-off by the end of the year? Yeah.
By the end of the year, yes.
Okay. All right. Okay, let's go on to Jim. Jim, what do you think? If the S&P will be up or down this week, confidence level, and maybe give us a little bit insight. How much up? How much down?
Okay. Again, we're all just giving opinions here, so let's just throw my hat in the ring here as far as the S&P. We're going into this zone 2050 to 2075, which we've already talked about, that obviously could have some resistance there. The VIX is down at 14, so you got a fairly low VIX, and you got some resistance coming up. So I would think that there's potential for a rollover here, but the confidence level would be probably below 50% because of the transports being so strong and not giving up so much so far. And then, of course, the utility average making all-time highs, and we're still in Q1, and this Q1 gets a lot of 401k money and IRA money, and brokers telling people to get in for the year money, and you can't fight the tape. So the tape has been strong, but up at this level, the game has changed a bit because now we're in the 2050, 2075 range, and we're at the VIX at 14. So it's not the same game it was a month or two ago. As far as how far down, we have last week's low around 2004. You got the previous week's low of 1967. those could be areas, obviously, that the market could find some support. Question, I think, on a little bit a bigger thing is, are we going to get through 2100 and 23.5? And if we do, is it going to be one of those rallies that market makers are going to just sell into? And the volume is going to be short covering and some breakout buying, and there'll be no follow through, and that might be it? Or is it going to fail from this level? And that's going to be something that'll probably be resolved within the next 2 to 4 weeks. So basically, that's how I see it right now. And again, I think a lot of the markets are in very exciting periods because, is it a real turn in the gold down here that we're seeing? Is it a real turn in oil down here that we're seeing? And are these stocks reaching at least a short-term high? That 10-year note going from 2.4, 2.5 area down into the 1.5, 1.75 area, I think got people spooked, and that's what's making some of these stocks getting a bid or at least short covering. The volume, I don't think, has been that great, you guys. Has the volume been very good lately in the last week? Have anybody watched the volume? Because I looked on some stocks, they look to be skinny versus their 200-day moving average volume. And so if they're running out of volume, that wouldn't be a positive either. Anybody check volume on it?
I have not watched volume, no.
Yeah. I think...
Anyone else?
The volume for the S&Ps?
No, the volume on, generally on the S&Ps, or also the volume on some of the more major stocks like, your Apples, your Googles, your Amazons, your, some of the oil stocks, things like that.
I do watch the volumes, but I don't really keep tight track of it. It looks like it's about average right now. It's actually starting to wane a little bit in the last week, but it isn't as I'd say it's about average. I mean, that's
yeah. I didn't do any in-depth study, but I did a few of the larger cap stocks, your Johnson & Johnsons, et cetera, and I was kind of seeing some evidence that it might be a little skinny on the rally.
Okay, I guess it's my turn, and yeah, it's going to be pretty darn flat for the week. So this is one of those tough weeks. I remember a couple of months ago I predicted something like a 90% downturn in the markets when everything was just about to fall off a cliff, and it totally did. And then a while ago I said things would go up, and things really looked like they were going up. And now we're in a place where it's we're getting close to those old-time highs. And I'm going to try to share my screen here. Let me know if it's working out. Can everyone see this?
Mm-hmm.
An S&P 500 chart? Okay. I just like to use stock charts because everyone can access it. So if you look over here between the 2000 and 2100, here we are, 2049. And I'm not a huge Elliott wave guy. Elliott wave, you basically got 3 moves to the upside, 2 moves to the downside. So you look at this big breakdown here, you got the 1 move down, and the next move down is that fake out move, where people get faked out here. Then we have a move up here. There's 1, here's 2, and it looks like it's kind of the 3rd one here. And when you're on a 3rd move, you got to sort of think to yourself, this is the last move. Okay, and we're going to go for it. We're going to have some targets, and I'm just going to set those sell limit orders. And I think it's really possible we can get up to about 2075. I don't know about this week, but I think the market can go up a little bit more. So I'm going to say up, but only a little bit, maybe 2075 max. And it's true the RSI is very high. I got the RSI up here, 69.19. At least that's what it says here on stock charts. That might be from yesterday, however. I have to refresh the page. But right up about the 70 level, it's very high. It determines how many up moves there have been recently, and all these white candles are those up moves. And some of my own indicators that I like to use here, here's a very fascinating one. You don't have to learn point and figure to do this, but what it is, this is the percent of stocks, oh sorry about this one, percent of stocks in the S&P 500 that are above their 50-day moving average. And it's at the astronomical level of 93.4 stocks in the S&P 500 are above their 50-day moving average. Now, look back here, early in the year it was under 10 and all the way up to 93, which is a huge move, and I've actually never ever seen it this high, ever. So if you look even at the 200, it's at 61. I just put the weekly on there. This can go higher. To get up into a normal bull market, you got to be around the 70, 80 level. So we still have more room to go in the 200-day moving average. And I'm not a big fundamental guy because I believe the technicals believe that the market is based on the current perception of future growth rates. And I think that the technicals lead that. So even if the economy and everything is awesome today, if everyone thinks it might not be quite as awesome in 6 months, then stocks will sell off. And when Eric was talking, I actually brought up the LQD, investment grade corporate bonds. And I think that corporate bonds, demand for corporate bonds, can be a type of a leading indicator on sort of how good you feel about the economy. And look at this massive buying spree of corporate bonds. And it's a bit of a flight. It's kind of a strange thing. It's a bit of a flight to quality. But in the end, if there's a bear market, these things sell off too. And these can be great buys, actually, at the beginning of a bull market to buy the LQD at low levels. That's really the big dividend trick. But we see a tiny little bit of selling off here. I would like to see if this breaks down on the LQD and to see what happens there. But I'm going to go a little bit up for the week, about 2075 on the S&P 500. And my main indicator, bullish percent, is at 7680. This determines what percent of stocks in the S&P 500 are on a near-term breakout buy signal. If you look back here, December, at the end of December, right here we can see this major breakdown, and that's basically, I think I was on the show, I said, yeah, like 90% stock market crash is going to happen, and this indicator is the best indicator I've ever found to predict stock market crashes. So you get it for free here on the Timing Research show. Okay, so I just wanted to go now to question 1. What developing events, technical or fundamental, will you be watching out for during the week? We maybe talked about this a little bit as to why we think stocks will go up and down, but I realized on the last show we didn't really talk too much about what some of the guests had written in. So I'm going to say here, developing events. Here's some good ones. We got full moon lunar eclipse, price of oil, SPY resistance, percent of the rates, resistance support levels, track the Fed, currency devaluations and interest rates, earnings, oil, China. China is an interesting one because obviously we've got Trump who wants to limit free trade with China, that's for sure. But what he may not realize is that the biggest export the United States has is U.S. dollars. So when you have a negative trade, when you have a trade deficit, you're sending money outside the country, and then you let everyone else deal with the dollars there, and you keep some U.S. dollars on home soil, which can keep the inflation down. So it's kind of a free ride to printing money in a way, is exporting inflation. And what you got now is you got, if you really close down the free trade, and guess what? Some of the money stays home more, and you may experience inflation. Then you try, and then you have to raise the rates, and we'll see what happens there. But let's go to Jim, Kenney. What developing events will we be watching out for during the week?
Yeah, I would say that the oil prices are going to be a very big key. If they push towards 44 or 45 or something like that, some kind of a rally, that'd be probably pretty positive for the stocks. You know, one of the reasons the stocks also have gone up is obviously the money has gone back into oil, and so that sector had a very big jump, and ergo that has a pretty good effect on some of these indexes. So the price of oil, I think, is going to be very, very important, and I think if the dollar would make some type of move of, you know, some significance rather than just meandering here, which is what it's been doing for a very long time, that would have an effect. And I think the calendar is a little bit light going into Easter. So, you know, people who are saying it might just be a fairly quiet week with a little bit of an upward bias, you know, that could be basically the way it turns out. So basically the price of oil might be one of the more important things.
Okay, great. Thanks, Jim. And Andrew, what do you think about this week, developing technical fundamental events that you're looking up for?
Yeah, and you know, the stock market in the short term is only a supply-demand curve between buyers and sellers, and you know, we've had such a nice run up, and it continues again today. I'm watching the futures trade, and now they're at the high of the session. We got up to 2044 quarter, and like I said, this overbought market condition could last for a while through the end of the quarter. So the one thing I'm looking at is oil, and it's funny that, you know, oil usually has an inverse relationship with the stock market. When oil goes down, it's actually good for the U.S. consumer because then they can spend more and they have, you know, residual income. But you know, oil is so linked and tied to the global growth story, and China growing as well. So when we see oil up higher, the market actually goes higher lately. So oil will be a big thing. You know, I talk about the CBOE's volatility index, known as the VIX. You know, now I see it going down on the day. I think that's important as well. 2059 is what I call a magnet, which is where the market can go up to test the open on the year to see if there's more buyers and sellers. I am in awe of this rally that we've had over the course of the last 2 weeks. I thought we would rally up, but I didn't think we'd get past that 2,000 level, which I thought we had some resistance. So academic data-wise, I don't really think there's much. We do have a day off on Friday, which is Good Friday. So I think we'll have an inside week, you know, and I don't think there'll be too much action. I don't see the futures moving more than 20 or 25 points this week total.
Looks like Neil got kicked off for a second. He's logging back in. Neil, you back?
Yeah, somehow I lost you guys. I'm back. Am I in time to say that it's Eric's turn?
Yes, perfect timing. Okay. I'm usually looking at data points for the most part. That we don't have any data points is, you know, when I spoke before about the 1947, I don't really see that as being this week's target. I should have made that a little bit more clear. I just see that as a target in general. I think that that's the number we're going to retrace to when we get the pullback, and that's where the market's going to want to migrate to. But going forward, I agree. I mean, with this oil thing, the rally, I really don't see oil moving that much higher. I mean, we do ever since they've started keeping track of inventories. This is at a 120-year high. So there's just a glut of oil out there. There's basically barges that are just driving in circles, and these guys are just living on a boat waiting to find a port to pull into, and they're kind of not getting that. We saw a lot of movement into Cushing and stuff like that that's trying to staff off some of that inventory. These guys have got to have oil come off because their inventory costs and everything else, they just have to start having lower prices to be able to move all of this. I don't see China as being a driver in pushing oil higher, just because I don't see China as being very robust right now. So the overall, like I said, global economy is going to put a drag on that. I also agree with Andrew in that lower oil prices are better for the overall economy. So we need to have these oil prices come off a little bit more, and that will help spark this recovery a little faster. But oil starting to push up in the 40s, 50s isn't great for the consumer. I mean, when it's below $2, everybody is just pulling up to the gas pumps, driving, taking a little bit longer trips and things of that nature. So I'd like to see oil come off a little bit, not really at the detriment of the equities, but to help the overall economy so we can start seeing this turnaround. But to answer your question, I'm usually looking at fundamentals.
Okay. Yeah, people aren't going to worry about oil when your friend's not asking to borrow your Costco card to the oil gas station anymore, is he?
No, nobody's asking.
That used to happen to me a lot. They say, "Hey man, I heard you got a Costco card." What do you mean? Yeah. Yeah, you think one of the amazing leading indicators, and I need to look at this more, is the shipping index. I have to look further into this about finding out how many ships are leaving port all around the world, and if there's some way we can track that. I don't know if anyone knows how to do that, but I think that might be a great leading indicator. So what I'm looking here for the week here is, I guess I already gave it away. Bullish percent is my main indicator. What percent of stocks are on near-term breakout buy signals? It's up in the 70s now. And basically the way this strategy works is it gets you that middle sweet spot of the trend, but you got to promise yourself you get in at the beginning and you hold unless it reverses 6% either way. So that's still going strong, but it's this darn percent of stocks above the 50-day moving average. 93 is just absolutely massive. Tells to me there could be a pullback. Then I'm going to wait for those 200 stocks above the 200-day moving average to catch back up. So, and also wanted to talk about oil. Way back in the late 90s, there was a cover. You could probably look this up on Google. Say the end of the oil age. I don't know if anyone could look that up while I'm talking and share. That'd be so awesome if you could. The end of the oil age, and it was, I think, a Time magazine or an Economist magazine where they show these rusted out oil pumps, and they say it's the end of the oil age. And back then, oil was a very small percentage of the S&P 500, like maybe 5%, but then it got as high as, I think, 15% in the mid-2000s, and then that's when oil prices go up. You know, then oil companies' profits go up, and then the stock market goes up because there's just happens to be. Wait a sec. Oh, it said that something. Hopefully I'm back on the show here. Can anyone hear me?
Yeah, I can hear you.
Okay, somehow it started two shows. But about oil, oil stocks used to only be about 5% of the S&P 500. Then they were as high as 15%. And like Andrew was saying, when oil prices go down, stocks go up. That's exactly how it was in the late 90s, early 2000s. Then it switched when oil stocks became a greater percent of the S&P 500. Now I think it's sort of meandering back and forth. I mean, it doesn't take a genius to know that low oil prices are good for the economy unless you're in the oil field. So oil, I think, yeah, maybe you can peak to 45 or so recently, and there could be some good deals in the oil sector. But basically, I'm just staying long until these indicators reverse. And I lost the call a couple times. Did we get everyone on that question? I think Andrew, Jim, we got to you.
Yep.
Yes.
Okay. So now we are on our last question, and that is, yeah, we actually had some readers that were asking we could get a little bit more into this. What technical or fundamental indicators are the most influential for your trading or investing? And I just wanted to write down what a few people wrote here. TTM squeeze. I'm not actually sure what the TTM squeeze is. Is that short squeeze? Volatility, slow stochastics, MACD momentum. I think that's great. Slow stochastics, momentum. Data graphs. Let's see, volume, candlesticks. Fibonacci. I don't use a Fibonacci. I go a little bit more by feel on the pullback, the trend lines. Market fundamentals. That's you, Eric. Bollinger squeeze. Pivot points. Williams chart. Stochastic RSI, MACD. So maybe we can go to what technical or fundamental indicators are most influential for your trading. What do you think? What are your favorites?
I didn't hear you, yes.
It was just what are your favorite technical or fundamental indicators that you use in your daily, weekly analysis?
For me, the one that I use is that market profile and monkey bars that I showed a little bit earlier, and this is one of the NASDAQ coming up. I think you guys can see this. I started out in college as a psychology degree. Some money that I had earned, I started investing in some stocks. And so I've always gone back to the psychology aspect of trading. Even on the floor of the Board of Trade, I always said that my psychology degree was more important than my financial degree that I had. So this market profile really gives you the overall psychology of the market in my eyes. It tells you where the most amount of volume and time has been spent, which really gives you an indication of where the comfort zone is. And with NASDAQ, we're just above that, and you know, I could see us trading a bit sideways to down here going forward, because right now the NASDAQ's at its happy place, if you will, where the most people have spent their time and money trading. So it's just a comfort food kind of thing. So psychology of the market is huge for me, and this is the one I look at the most because it will want to migrate to this area, which is the point of control. That, like I said, the most time and volume. Once you get pushed out into these like thinner areas right here, that's where you really can see when you blow it up where the volume really falls off the wayside, and people are stopping the business, and that's where you're going to see your movement. And the same on the upper end when it gets a little long in the tooth on the upper side, and you start seeing the single prints. That's where you know the market's ready to turn, and want to go back at least to the point of control, and then to the other bound of the value area.
Okay, great. Thanks a lot, Jim. And
That was Eric.
Andrew?
Yeah.
Oh. No, Eric sounds like Eric wants to talk. Eric, what are your favorite?
Sorry,
indicators that you use?
That was Eric.
that was me talking
Eric,
about the market. That was me talking about the market profile.
Okay, that was you. So Jim already talked. So now it's Andrew's turn. Okay.
Okay, it's Andrew. One thing I use a lot is Ichimoku Kinkin Hoi, otherwise known as the Ichimoku Cloud. It's a Japanese technical indicator that shows supply-demand curve over whatever time period you want to use it. It is a free indicator. You can download it on Thinkorswim TradeStation, NinjaTrader, eSignal, Option House, basically every single platform. When I started using it, Thinkorswim and TradeStation were the only people that had it, but it's becoming a lot more popular. And you know, there's courses on, and I have a couple courses. I've written an ebook on it as well. But it just shows supply-demand curve. And actually, we broke out the S&P 500 futures on the daily chart, which is what the futures trade best on as a swing trade, at 1975. So if I would have happened to get into that trade, I'd be good for about 67 points so far. So that's what I use. General, simple, and easy. If any product is above the cloud, it's bullish. In the cloud, it's neutral. And below the cloud is bearish. I use it personally to day trade Apple, Baba, Facebook, GoPro, Tesla, Twitter. Those are my 6 main stocks. And I trade those on a 5-minute bar. Also, it can be used in Forex, futures. So that's my number one. I do look at RSI, as I talked about earlier, Relative Strength Index, just to look at overbought or oversold levels, which we're touching 70 right now in the S&P. So Ichimoku Cloud and a little bit of RSI, but mostly the Ichimoku Cloud.
Yeah, I like the Ichimoku Cloud quite a bit too. It's really great. It's amazing, especially when it pulls back to that support right at the tip of that cloud, how you get that bounce there. When you say you trade during the day, are you talking like 5-minute, 15-minute Ichimoku Cloud settings?
Yeah, I trade on a 5-minute bar using the 6 stocks that I personally like to trade, because as a generalization, Apple and Facebook are really trending. Ichimoku Cloud is great for trending products. In trading range environments, it's not going to work very well. So if I try to trade the Ichimoku Cloud on a 5-minute bar in GE, I mean, it's penny wide, a million shares up. In something like Apple and Facebook, they're trending, so it works really, really well.
Yeah, you're absolutely right about the cloud. It's only good for trending. It doesn't work well when something's going sideways. And I've read some books on Ichimoku, and that's exactly what they say for sure. Anything else, Andrew?
No, those are the big ones. You know, you could use Ichimoku to trade Forex on a 4-hour bar as well. It really is, in my point of view, the best indicator possibly out there. We have like 3 proprietary indicators on Thinkorswim, and then I've written an ebook on it. And I'm currently working on a master course on it. So that's my favorite technical indicator.
Okay, great. I'm going to bring up just quickly a real quick chart of that. Just a real basic one because I had it there. I just put the Ichimoku Cloud over. That's what Andrew was talking about here. We had that breakout here on the S&P 500. Can people see the chart? Yeah, it's up.
Yeah.
And then, so yeah, we have this move here, and obviously breaks down below the cloud. And so you're looking at something here. I mean, you're not going to be doing any bottom fishing here, are you? With it coming straight down from the cloud, but maybe you can start doing some bottom fishing on a breakout here. Wait till something moves up here. Now we're at that top of that range. I'm just going to check out a little weekly chart of the cloud, see what happens. Yeah, it's not so good on the weekly, but we can't go back too far. But what I've actually noticed on a weekly chart on my own system is this weekly S&P 500 chart, I think it was intact. How long, Andrew? 3-4 years, I think, wasn't it? Since 2011 on the cloud, maybe you remember?
Yeah, I did not. I haven't looked at the weekly in a long time. I usually mostly use the daily.
Yeah, but for someone who, a lot of people, they love to try to hold something long term, you can just hit that weekly cloud, and if it's above, stay in, below, get out. Okay, so let's go to some closing thoughts. Or anything you wanted to say and mention about your site, what people can expect from your services, and should people like to join and become one of your private clients?
Hey, Neil.
Yep.
Is this the article you were looking for?
Yeah, that's the one. That's exactly the one. End of the oil age, then the rusted out gas pumps. Yeah.
It looks like from the Economist in 2003. So if people want to look that up, be able to find it. End of the oil age from the Economist.
Yeah, I was just going to read a little bit about there, and that was exactly the beginning of the oil boom, wasn't it, in 2003? So that's actually something I read in some of my favorite trading books, is that if you're at the airport or you walk to work, you walk by the newsstand, read those darn headlines on those newspapers. Read the headlines in the magazines. Don't buy them. All that you need to do is read the headlines and do the exact opposite, and you will be a millionaire. It's absolutely true. These things are. There was some movies coming out. The peak oil was coming out. When was that? 2008. A movie called The Crude Awakening came out, and it was exactly at the peak of oil. And so when these things come out, you notice them. They really work at the extremes. Closing thoughts. What can people expect to be a private member of your service? Jim, Option Professor.
Yeah, sure. People can go to optionprofessor.com and get information on the 7 DVDs that are available. That'll go over all the different uses and risks of the option strategies out there. Again, 5.5 hours of materials, quite a bit of material, so a wide-ranging group of DVDs. Just looking forward here, I think it's going to be a very exciting period after we get through this first quarter where a lot of questions might be answered. Questions such as, we've seen turn-ups in the oil and the metals, and the question will be, are they legitimate turns, or are they, just bounces that'll retreat? And on the agricultural sector, we're going into the planting and the growing season, so it'll be interesting to see if those markets may turn as the metals and oil have. And on the stock side, you're talking about a situation where we all are saying this region up here could very well be a tough period to get through. Especially as we go into that seasonal period of April through October, which sometimes gets a little dicey with the sell in May and go away, and the August through October time frame. So hedging strategies where you use your married puts and you use your collars, so you can at least offset downside pressure if it does arise. Very, very limited risk speculation on some of these, and hedging tactics might be not a bad thing to be aware of. So at the Option Professor, through the DVDs, you have some tools to work with, and I think there's value there.
Okay, great. And there definitely is a time to hedge. I mean, you could have a sideways market for months, and you might as well try to come while you're doing it. Okay, let's go on to Aaron Pro Trader Strategies. People expect to be a private client of yours.
Yes. With Pro Trader Strategies, we also every Friday have a webinar where I go into detail on a particular strategy and really nail it down on what deltas I'm looking for to start implementing this strategy. I'm usually on the side of collecting premium, so a lot of my strategies are selling strategies. So in that, a lot of times you're going to need to defend those. Say, for instance, if you have on an iron condor, when and where and how to defend an iron condor to increase your probability of success. So you can find things out like that. The straddle, like we mentioned earlier, I'm doing one on the straddle, but it's appropriate for an IRA the way it is appropriate for an IRA. I, again, look for the sell side to collect that premium because your probabilities of success are greater with that. But you can't do that in an IRA. And some people, I think I'm bearish or neutral at this point, but I want to limit my risk to the upside. So I'm going to be talking about how and where you add this long call to define your risk and make it a riskless to the upside, because we're going to be collecting premium, using some of that premium to buy our long call. So you have no risk to the upside. But if the market moves sideways to down, then you will be able to collect your overall premiums there. So I'm going to be talking about how to implement that strategy, and I have done several other webinars on all kinds of different strategies, like I said, from the iron butterfly, iron condor, the butterflies, call spreads, straddle strangles, you name it, we've basically done it. And then in my daily market commentaries, I'll talk about when, where, and why I put on a particular strategy, whether it be an iron condor or call spread, and what I'm seeing. So I'll talk about support resistance levels, and I will also talk about some of the fundamentals around that underlying, and that's why I would implement these strategies for what I see in those fundamentals.
Okay, great. Thanks, Eric, from ProTraderStrategies.com. It sounds like you and Jim Kenney finally can explain to everyone all of these complicated strategies that everyone's always hearing about in the options trading field and how they can actually implement them into the account. Let's go on to Andrew Keene from Alpha Shark. Andrew, what could someone expect to be a private client of yours?
Yeah, so we run one of the largest live trading rooms in the world. We have 6 moderators, all trading their own individual trading account, real money in front of real traders. We have close to 500 members of our trading room. So we have an open chat box, and we also have, like I said, 6 moderators running the room. Some people specialize in Forex, some specialize in futures. We have an earnings trader. We have someone who specializes in the VIX. So a lot of educational material. I've personally written 3 books, 2 ebooks, and probably about 40. We have 30 hours of option education on DVD as well. So you can go to the alphashark.com. You can join as a subscriber for free, where you'll get daily videos and commentary. Also, traders can always email me at andrew@alphashark.com if they have any questions. I'm not a registered investment advisor. I can't give recommendations or advice, but I can offer my opinion, and it's a really good educational services for new traders, intermediate traders, and expert traders.
Okay, great. Sounds like you have all the bases there covered, Andrew, from beginners to experts. And so there's different trading rooms depending upon the strategy that you want to use for your account, correct?
It's one trading room, but there's different moderators. So I run the trading room for the first hour and a half of the day. I trade unusual option activity. So my focus is watching institutional order flow in the option market. But we do have other traders that trade Forex, futures, also earnings, or the VIX.
Hey, Andrew, I know you look for the unusual option activity. Do you see the what's going on in Dollar Tree?
Like today or in the last couple of weeks?
Yeah, I mean, it actually might have been since we've gone on. I was just flipping through some of that stuff and saw that there was a huge spike in some option volume in Dollar Tree.
It traded, yeah, they sold the April 75 puts on the bid. So, I mean, that's bullish to neutral. I mean, they have $5 in wiggle room. Yeah, so I saw some bullish activity. There's some seller puts. So I watch a scanner called Trade Alert. It's based out of New York. It costs about $350 a month. And I watch basically every single institutional order flow across every exchange. And I set my minimum quantity of 1,000. And it has to be 2.0 times the usual volume. That Dollar Tree trade was 2.9 times. So I actually didn't see it hit the tape for some reason. But I see it now. And, you know, big seller of puts on the April 75 line. So that's bullish to neutral.
Good.
Okay, that's pretty cool. TradeAlert.com. I wasn't aware of that service. People can just get alerts to unusual option activity.
Yeah, I mean, there's like 1,000 trades that hit the tape over 1,000 lots. So I mean, unless you're very expert level in the trading the option market, you'll drive yourself insane. You know, so but it's a really good service.
Yeah, every once in a while you'll really see something that sort of gives you, I guess the light bulb feeling, saying, hey, you know, this is something I can really use.
Right.
Okay, so a little bit about TraderReview.net. We use point and figure and the Ichimoku Cloud as technical analysis, and private clients can expect a tight-knit portfolio, 3 to 5 picks at a time. We had a lot of winners lately. We used triple leverage ETFs the last time on some energy stocks and semiconductors and the markets, and 200% winner on Apache calls, biggest trade of the year. Apache's a oil stock that can really rebound. And so I sent that out to some people that took advantage of that. I don't use other complicated strategies for options. I just wait until something looks really good, like a touch of the cloud or a great break from the bottom in a sector that's moving up. And I send that out daily at 8 a.m. every day, 5 days a week. And so that's about it for me. And when you sign up, you can also get a very interesting calculator I developed. It's a way where you can position size your trades. A lot of people, let's say 100 grand, they'll say, oh, I put 5 grand in pick. But what my calculator does is you put in how much money you have, the stock price, and the stop point, and what percent you want to put in to risk. So if it's set at 1%, what that does is it calculates how much to buy so that if you are stopped out, your account will drop by only X 1%. So if the stop's very close, I mean, you're buying at 52, the stop is at 49, you end up putting about a third of your account into that pick. But if you're buying at 35 and the stop is at 23 on a very volatile biotech stock, then you're going to be putting a lot less in your account, like about 5%. So it's actually been proven to outperform equal weight, and it's a calculator that I developed, and you get a free download link to that with something that can really help you saying, oh, you know, why should I buy this? It doesn't move much, and I want to go for the stock that's really moving, and you get stopped out because of the volatility, and this is going to help prevent that. And so that's a cool little bonus that I like to give to people. And that's about it. We're going to wrap up the show. If anyone else has any thoughts they'd like to share, otherwise I'm going to send it back over to David Cosbender. Okay, David, looks like that's the end of the show. You have some closing thoughts for us.
Yeah, thanks, guys. Great show. Just want to remind everyone listening to go to TimingResearch.com/reports, and you can download this or any past report there. Also, we have a great lineup for the show next week. Jason Jankowski, James Ramelli, Dean Jenkins, Sam Borgi, and Dave Landry will be back as moderator. And so I just want to, again, thank my guests for this week, Andrew Keene of AlphaShark.com, Eric Wilkinson of ProTraderStrategies.com, Jim Kenney of OptionProfessor.com, and of course Neil Batho of TraderReview.net. Thank you for hosting. Thanks, guys.
Thank you for having us.
Hey guys, I had a question for you guys. Is the show over